Welcome, everyone. Today is Thursday, February 27th, and we're here for Forex Live. This is our live trading class, as I mentioned, where we utilize the Forex show, the method the Forex show teaches us, and we apply that to live market conditions. Before we get started into trading, we have to let you know that unique experiences and past performances do not guarantee future results, that the trading involves risk. Sometimes every trade's not going to be a winner. We should always be trading with risk capital and money that we are okay with losing, because otherwise we're going to make some probably pretty emotional decisions around what we're trading and how we're trading it. I'll give you just a second to read through this, and then we can get on with our trading day. All right, that should be long enough. Let's go ahead and minimize that, and okay, so here we are. So what we'll be doing today is we will be going through the 12-step daily regimen. So we should have a couple of things open when we're ready to start trading today. We need to have, of course, if I can get that up, we should have this printed out or on your desktop so we can follow along. This is the daily trading regimen that Forex Show has given us. It's a checklist to ensure that we always use the same method for entering the trades. That's very important. Consistency is key. If we're not consistent, then we're going to have very inconsistent results. If you're consistently doing something the same way, even if you're losing, if you're consistent about your method for entry and we're losing, then we can at least adjust what we're doing. We can go back and identify, steps that we're taking and see where we might be failing and make changes there. If we have an inconsistent approach, then there's nothing that's measurable. There's nothing that's manageable, which is why we end up with very inconsistent results. You don't know what it is, which component is causing the meltdown, the failure. And just because you have a losing trade doesn't mean that the method's wrong. It just means you had a losing trade. It's over time. We have to look at the method over time and ensure that we're doing everything to the letter of what our method is. So the checklist helps us do that. It helps us stay consistent. So we should have this up, either print it out. I print mine out and I write these down. I'm kind of tactile. Grew up in the 70s and 80s, so I'm used to writing things down, and that's what really registers in my brain when I write it down. Others, you may just like to print it out and use it as a Word document and fill this out. Either way, as long as you're following the approach, that's the important thing. So we need to have this open. The other thing that we should have open is our daily report, and this is found in the members area, of course, under FX alerts and then daily reports. We need to have that open so that we can follow along, and we'll be utilizing parts of this daily report with our trading today. Then, of course, we should have our MetaTrader 4 terminal open and applied here, and we need to have one of our Forex Trader templates, whether it's the Pending Order Pro or the FTT Pending Order Pro, doesn't matter, whichever suits you best. I like the FTT Pending Order Pro because I have the session boxes at that point, and I'm able to see the key areas that we'd like to trade from. So with that said, let's go ahead and jump into it. Last things we should have open, we'll get to in just a moment, is a news source so that we can see what's happening in the day, and then of course the futures market. But let's just go ahead and get started. We'll be doing this exercise on the Euro USD, the Pound USD, and the US Yen. As always, if you have questions, be sure you type them in. Forex Joe's on with us as well, and he'll be available to answer questions as he gives his commentary just a little bit later. So let's go ahead and get to it. What's going on for the day? Well, starting things off here on the Euro USD, we're currently trading at 36.77. 36.71. adding pips to that somehow. So 36.71. And so now what we're going to do is, once we capture a price, we're going to pop over here, and we're going to go to the daily report, and we're going to capture our channel information. So what do we see here? Well, we see we have a channel bottom at 36.25, and then we have a channel top at 37.28, and that's a 2 of 3 channel. So we'll want to keep our eye on that. That was a channel bottom a couple of days ago. It was a 2 of 3 channel, and it ended up breaking through there, and now as we know from just basic support resistance. It doesn't have to be complicated, guys. Basic support and resistance, we know that once a channel has been broken, that it typically becomes resistance. So if we have a support level that's broken, then it's going to become resistance for us. So we've broken through that bottom of 37.28, and now it's a channel top for us there at 37.28. Next up is our support and resistance levels, and we know that we're trading at 36.71. So what do we have around us? Well, to the downside, we have 36.54, followed by 36.23. And then to the upside, we have 37.15, and of course 37.28, which aligns with that channel top. All right. Next up, are we trending or oscillating? What's happening in the market today? Trending or oscillating? We had a big move yesterday, but today we're kind of back to a bit of an oscillator. But definitely if we look at this, we can see that we're really oscillating. I don't even want to get much beyond that. So here we are. We're in an oscillating market for the day. A bit of a trend down. Looks like right before the London Open, there was maybe some news that caused a blip there, but ultimately oscillated through the most part of Asia and oscillating actually with a little bit of a trend up since London Open. Higher highs, higher lows. So see what happens there. Big question though, is have we broken our channel? Have we broken above 37.28? Or have we broken below 36.25? And the answer there is no, which just reinforces the oscillating bit. Average steady range. Well, today we've moved 52 pips, and on average, we're not seeing much. Our pips our range is just getting smaller and smaller and smaller, isn't it? We have been kind of stuck in a 60 to 70 pip range prior to the middle of the year. We know that was actually closer to an 80 to 100 pip range, but really been very, very range bound as of lately. In fact, even yesterday, it looks like a huge move, but it was only 93 pips, which was kind of your average move for this pair coming into the middle of the year, which we never seem to get out of the summertime blues time. Next up, news. Do we have any news? What's going on? Let's have a look here. So we go to Forex Factory, and we'll have a look to see if there's any red reports coming out. And actually, there is a big news event coming up here. This has been. Oh, this isn't even the one I was thinking of. No, but we do have looks like our Fed chair is speaking here in about an hour, and that will potentially be a market mover. We want to always be careful around that because the news can move on sound bites. It's not usually the canned statement. It's the Q&A afterwards. You'll see price bounce around and move based on the sound bites that are coming out. So we'll keep an eye there. So there is some major news coming up, and this may just be an indication for us to play it safe today and stay away until after this occurs. We did have some unemployment news came out. Yesterday we had new home sales, which was crazy high. I don't really know how that occurred, given the fact that nobody's employed. But anyway, here we are. Unemployment came out earlier, which was bad news for the U.S. dollar. And now we've got Jan speaking here a little bit later. We'll see what comes out of that. So news, yes. Just put a Y there, 10 o'clock. Next up, last thing we're going to check before we start looking for trading levels is our futures market. And again, this has been kind of a crazy story too for the first part of this year. Been kind of unhinged from the norm. And lately, what we typically see is when money flows out of the Dow, it flows into the dollar. So if we're looking at Dow weakness, S&P, crude, gold, and silver, we typically look at those as a bucket. If they're moving down, typically the dollar is moving up. Conversely, if the dollar is moving down, then these are moving up. We're taking liquid positions here, and we're investing them here, which is causing these to go up as this goes down. Then conversely, as we're liquidating positions here, we're holding them in U.S. dollars, which causes the dollar to rally. But it's been unhinged. It's been crazy the first part of this year. It hasn't been following what the norm typically is. It's been a very mixed futures market, and as a result, it's been a very confused dollar as well. So again, just more, the more that you see things that are outside of the norm, it's just more of an indication to be careful and kind of play things close to the vest, right? We want to be not taking any unnecessary risks. It's just telling us that something's mixed, and that typically when it gets mixed up like this for a long period, we're looking for, potentially a really big move. So we just want to be able to, play it safe so that we can still be in the game to participate when that big move occurs, and we want to definitely be on the right side of that big move. When's it going to occur? Your guess is as good as mine. I don't know. But I think it's coming soon based on how all this has been acting. We're going to see a correction one way or the other. I don't know if it's going to be up or down, and it doesn't really matter to us if it's up or down. It just matters that we're, there for it when it starts to occur so we can take a ride. All right, so we've got a bunch of information gathered. Let's go over to our charts. Since Yellen's testifying in an hour or less than an hour, 45 minutes, I really don't see us taking a trade right now, but we'll identify some key levels. Obviously here, we have 37.28, big level for us, huge level for us. It's a 2 of 3 channel. It was support that was broken. It's been retested. It hasn't been tested yet. 37.28 will be a big level for us to watch, so we'll want to mark that. If we consolidate here just a bit, there's not too much for us to see as far as our range consolidation. Maybe this 36.80, which is typically a good level to look at. The 80s, 20, 80, so it's whole number, 20, 80, or 20, 50, 80, and then a whole number. But, I even like whole numbers and the 50 a little bit better than the 20s and the 80s. But ultimately, right through here, we've got setting up where we want to compress channels. Forex Joe would tell us we want to look right through here and have a look at this area, at this 36.80, just to kind of watch this intraday. So we pushed through here, we come back, and we've tested it a few times, and now it broke it during the first part, or during the end of Asia, first part of London, and then it's oscillated again, and probably will sit here for a bit, leading up to that 10 o'clock testimony from Ms. Yellen. So we'll see what happens here. But for me, 37.28 is going to be the big level up here. We know that's a 2 of 3 channel, and just kind of playing it safe, we're going to keep our eyes on the big levels for the day, because it's very possible during this that we could see some whip in the marketplace that would push us up and give us an opportunity to get in. But again, no unnecessary risks. Today is a big day. We've been in a confused market, and this testimony that's coming up could really be a market mover. So we just want to wait for that. Let's wait for it to occur, and then we'll take some trades. But here we've got 36.80, and then we've also got here this 37.28. This is the 2 of 3 channel. So if we're going to pay attention to anything, it would be this larger channel, which is up here, this 2 of 3 channel. All right, so pound USD. What are we going to watch here? Pound USD currently trading at 66.64. And what do we see over here for our daily report? All right, well, we see 66.04 as a channel bottom, and we see 66.85 as a channel top. So again, we're kind of caught in the middle there, 66.85, 66.04. No big numbers lining up. I mean, if we do break above here, we've got a ways to go, but 70.78 might come into play. But there's nothing today that's causing us to take notes. It's a 2 of 3 or a 3 of 3 channel. I don't want color scheme improvements. It always suggests that to me. I don't know why. I like my color scheme. All right. Support resistance. Okay, we're trading at 66.64. So what do we need to watch here? Well, below us we've got 66.53. Below that, 66.06, which is right there at that channel bottom. So, kind of adds a little extra level to us for that 66.04 channel bottom. To the upside, 66.60, and if we keep moving, 6,700, big whole number up there, we want to keep our eyes on. Are we trending or oscillating for the day? What's happening here? Again, just like with the euro, bit of an oscillating market. We pushed down, and right before that London Open, and now we're right back where we started from, coming into Ms. Yellen's testimony. So. Again, really no surprises. A lot of times you see that. We even see it during non-farm payroll weeks. It'll oscillate around, but it always seems to come back to kind of near where it opened or right around that area, right before the actual announcement of the big news. So interesting. It's very interesting to watch the manipulation in the marketplace. So we know we're oscillating. Has the channel been broken? Have we broken below 66.04 or above 66.85? And again, the answer there is no, just adding support to the fact that we're oscillating. Average range, well, today we've moved 67 pips. Average range on this one, again, we've been caught in a 70 to 80 pip range. This pair prior to the beginning, really prior to the middle of last year, was moving in the 100 to 110 pip range. Yesterday was kind of a big day for the euro, but we didn't see much here. It kind of stuck right in what its range typically is. Some news coming up, we know there is, and the futures market's mixed, and that won't have changed too much. Floor traders come online here in about 12 minutes, and I doubt we'll see anything there given the fact that we've got such big news coming up, in 42 minutes today. So I think, we won't see much direction until after this Fed meeting gets wrapped up today. All right, so what are we going to do? What levels do we want to look at? Well, for me, 6,700 is going to be a big area, since that is a whole number for us. It's also a support resistance level up here. And then down to the bottom, we've got 66.04. So just looking at this channel, we'd be watching, for a break to one side or the other, and then, looking to make sure the market's going to continue that momentum. But if it breaks and closes above, and then second candle closes above that, we'd look to buy it, buy it on a retest. If we break below here, we'd wait for a second candle to close, and then we'd sell it on a retest. Pretty basic. Right now, just like we saw with the euro, if we consolidate our channel a bit, here we are at this 66.70 to 66.60 range right through here. So we've got a pretty tight range here, and depending on what happens, if you really want to consolidate and look for a quicker move, we could wait for a break here, one direction or the other following news, and then play on a retest of this level, of these levels. But again, we really need to wait for news. There's some major news coming up. Sound bites are going to be a big mover as the market makers try to adjust their levels of risk. And so we just want to stay on the sidelines, wait for the news. I just can't express that enough. News is exciting, and there's a lot of stuff happening, but it's so easy to be on the wrong side of the coin. It's a gamble. You don't know what it's going to do. You don't know unless you're paying a lot of money, to get the feed ahead of time. You don't know what news is going to happen. So, why take the risk? Let the news occur, let the market find its direction, and then, we go with that. It's a lot less risk on our part, and that's what we're all about. It's all about controlling risk. If we can control the risk up front, then the profits will take care of themselves. I think Forex Shows said that, and I know Joel Posen has said that as well. If we just take care of controlling our risk, we're going to, the profits will take care of themselves. All right, so the last one up, levels to watch here for the U.S. yen. What do we see here? Well, we're currently trading at 102.08. And what do we see? Channel information. Okay. Channel info says, what do we have? Well, we've got a compressed channel, daily channel. We're looking at 102.78 for the channel top and 102.22 for the channel bottom. Support resistance levels, trading at 102.08. We're kind of at a decision point right now. 102.09 is a support resistance level on the report. If we break down below that, we've got 101.65. To the flip side, if we're going up, we've got 102.23, which aligns with our channel bottom. And if we continue above that, 102.60. All right, trending or oscillating on this currency. Looks like we're in a bit of a downward trend. So we're in a little bit of a downward trend. Confirmation on that. Has the channel been broken? Have we broken above 102.78? Nope. Have we broken below 102.22? Well, of course we have. We're trading below it right now. So yes, we certainly have. Average daily range. Well, today we moved 72 pips, and that's really about it for this currency. We've kind of pushed past the range. Even coming into to this year and middle of last year, this pair kind of hung, in about an 80 pip range. Sometimes a little higher, but typically in about an 80 pip range. Right now for the new year, it's been about a 55 pip range, so significantly different, 60 to 70 pips. So we've kind of hit, top to bottom here, what we would normally see for the range in this currency pair. So there you have it. News, yep, there's news, and we know the futures markets is wacky. So with that said, what levels will we watch for the day? Well, a couple of areas stand out to us. We've got 102.34 if we compress the channel. Of course, we've got 102.09 down here as a channel bottom, 102.22. 102.09, which is a kind of our decision point right now. We've pushed through this level. We've come back. We're hanging here. We're retesting it. And 102.22 is where? It's right about here. Oops. Missed it. There we go, 102.22. There was our channel bottom. So, levels to watch. Gosh, it's kind of a tough one. I would probably favor this 102.34. I have a feeling we're going to push back up kind of to near the open prior to the testimony beginning. So, like everything else is kind of leveling out here. I have a feeling this one's going to pull back to level out here as well, or right around it, and then we'll be watching this area for a break one way or the other. But we need to wait for news to occur, and then we can place our trade. So, of course, again, just we always want to err on the conservative side and make sure that we're giving the market an opportunity to find its direction. No reason whatsoever to gamble and take the trade ahead of news, and there really isn't. There's not enough time for it to make a move for us. It's going to be a pretty big news event, so stay on the sideline, let it occur, and then just use the method. Use this exact same method. Look at what the futures market's doing after news. Look at where things are going. Look at what the trends are. And if the trade doesn't set up, then don't take it. So you didn't take a trade for the day. That's totally fine. You don't have to trade every day. We need to be in the market and look for trades every day and look for trading opportunities. But if the trade doesn't kick in, or if we look at key levels and the levels don't hit, that's fine. As traders, we want to be active, but we don't have to be trading every single day. So just keep that in mind as we watch and are patient. Sit on our hands, wait for news to occur. Don't get caught up in the exuberance of the big move, and we'll be fine. All right. So with that, I'll go ahead and turn it over to Forex Joe. Of course, you guys are here, so you have questions every weekday here. Well, not every weekday, but every weekday that we're in class to ask questions directly, converse directly with Forex Joe. So this is an opportunity, to have that interaction. So, please be sure you're prepared with your questions, and I'll go ahead and turn it over to Forex Joe.
Okay, thanks, Brian. Well, the song remains the same, to quote Led Zeppelin, ladies and gentlemen. If you are a scalper, day trader, and you are playing range-bound markets, this is like having early Christmas for this year. Usually it doesn't happen until July and August, but we continue to stay range-bound. As I saw, the Euro's only moved, about 55 pips today. And the yen has moved a little bit more than that, 28, 45, 73 pips. I've tried to place the last 2 days in the report just exactly what we were up against. If you're a swing trader trying to trade the four majors. On Tuesday, we only had 3 of 22 pairs that we cover that moved 100-plus pips. None of them were the four majors. On Wednesday, yesterday, we only had 3 of 22 pairs that moved 100 overall pips. None of those were the majors. The last 7 sessions, when you take the four majors, which is 28 sessions, we've had one 100-pip mover. So this puts this in perspective, and why that if you're using the reports, the daily report, especially the trend report, and you start getting frustrated if you're trading live, you have these simple techniques that I developed many moons ago when I started this just on a yellow pad that you have at your fingertips. Now, you can use this information. I would encourage you to use this information along with the software that we have, including the Currency Trend Tracker, the Fast Track Trader, the Forex Trader Pro software. You've got the alerts. You've got Brian giving out information. Brian did another superb job of explaining everything today. I think Yellen is not going to move the markets that much. I could be wrong today, but I think the markets are going to stay range bound. I think there's a dichotomy in the system right now of exactly what the ECB and Bank of England's going to do next week. And they may not lower rates next week as far as cutting rates, but you're going to see a situation where there's going to be some information that will help jumpstart these markets. So we've been kind of stuck because of the so-called ice box, and I don't know, some of you are overseas, so you don't really know the situation that's going on here. There's another cold front going through the center and northeast of the country, and it reached all the way down here in Texas again. In fact, I woke up this morning, it was like 20 degrees when I stepped outside, and now it's going to warm up in the 50s. Tomorrow it'll be 75 degrees over the weekend, and then it's supposed to go back down into the 30s next week. In fact, this is like the 15th or 16th coldest winter we've ever had here in Texas as far as what's transpired. I also saw on the news where you had a situation where you had a lake completely frozen over. And they're very concerned that once this lake unfreezes, they actually showed some pictures of what happened when it unfroze the last time. It's like a tsunami of 5 or 6 foot of water just going over the banks and flooding what's around it. Now, what in the world is Forex Show talking about? Because what's been blamed so far for a lot of the bad numbers has been the cold weather around the United States. There's a drought out west in California. They're trying to find water, and there's been cold weather all through the Midwest and the Northeast. There's been plenty of snow, and you've got plenty of areas to where it's just been really cold for an extended period of time. In fact, in some areas there for a period of time, it was actually colder than it was in the North or South Pole with the wind chill because of the way that the winds have changed. The bottom line is, at some point in time, the economy is not going to be blamed on the weather. It's going to be blamed on what's happening under current market conditions. And if you take a look, it's really not this hard or difficult to predict. We have a situation where Congress is stagnant. You have a president that's stagnant. They are not creating jobs. There's 50 million people on food stamps. Our debt has been extended again with the debt ceiling being extended and more debt being added. So we're $17 trillion in debt and growing. They're trying to cut back on the quantitative easing. All it does has been propping up the stock markets. There's not jobs being created. You have more and more people out of work. You got 50 million people on food stamps, and now they're trying to blame that the economy is getting better. If you listen to the White House, the only thing that's stopping it is because of the weather. Well, when this happens in April and May, the weather won't be blamed. But there's some information coming from England, information coming from Europe, that suggest, along with Japan, that they're no better off than we are. So there's going to be some interesting events that's going to happen over the next 3 to 4 months. So I would encourage everyone to stay the course. I would encourage everyone, if you're a scalper or a day trader, to hone your skills. If you're swing trading, go ahead and place those trades that are coming out. Don't get frustrated. This was the reason, because I talked about in the report yesterday that the ranges were holding, that the patterns continued under current market conditions. And when you get a situation to where in the last 28 sessions of the 4 majors, you've only had one 100-pip mover, folks, that's when you're talking about people going on vacation in July and August, the Europeans going on vacation. Even then I went back and looked, and it was a lot more active back during that time than it has been here since the last month, or basically since we started 2014. So there will be a lot of information forthcoming today. We'll dissect it. We'll get ready. Tomorrow we'll have the end of the week. We'll get ready for next week. This is a short month. You have March 1st. Then next week we have the Bank of England. You have the ECB. You also have the non-farm payroll. And we'll get ready for the cycle all over again. But when you start taking a look at what you're doing and you're getting frustrated and you're trying to force, you are so mentally into it, you're so emotionally attached sometimes that you just keep saying, keep knocked out at take profit one. I get take profit one, get knocked out. Take profit one, knocked out. We went through years of people going through this scenario where they'd get hit with take profit one or take profit two very quickly. They'd get knocked out and break even plus one. And it's like I told them then, well, you're not losing any pips. You're building your stop loss account. But all you have to do is read the trade plan alerts. And even Brian, when I talked to him and Kirk about this, they didn't even really pay that much attention to what I kind of shared with everyone. But it's called hidden in plain sight. So you'll hear me talk about this throughout the years, talking about things that are hidden in plain sight. This is something that's hidden in plain sight that is just smacking us right upside the head. Everybody is concerned about what's happening. Nobody knows what the sense of direction is going to be. We're going to have to start focusing more, if you're a swing trader, on some of the other pairs that I give out earlier this month. The U.S. Canadian was moving. The Canadian looks like it's going to retest 112. We give out the Euro Aussie, the Pound Swissy. Those are pairs that were moving that would have generated 200 pips. Unfortunately, I didn't put any roller derby alerts on these. But we're going to remain patient. We generated over 1,000 pips in January. We now know that being calm, that I can scalp, you can day trade, you can pick up your 200 pips. If you're swing trading and you're trading the four majors, and if you're not trading some of those crosses that we've been talking about, when you only have 3 of the 22 pairs that's moved 100 plus pips in the last 2 sessions, you can't really get too excited about anything. So you have to remain patient, but this is where you do your work. You continue to have your practice regimen account. You continue to focus, as Brian alluded to earlier. These pairs are going to break out of these ranges, and we're going to have some major movers. The key will you be prepared, because you'll be setting the trades every day, and then all of a sudden, that's when you hit the lucky 7. The 7s start coming. All right, the 7s start coming several times in a row. It's called probability factors. Right now, we're rolling a 7, and then it's a crap out. It's a 7, and it's crap out. But you don't have much risk. You've lowered take profit 1. You've lowered take profit 2. You're getting in with these ranges. If you're seeing the numbers when the numbers are come out by compressing and compacting the channels on the trade alerts, and you are scalping those numbers, you are making pips. If you're day trading and you're keeping your day trades to 10 to 15 pips and you're taking profit 1, taking profit 2, then you're generating pips. That's what this is all about in this type of current market conditions. So as swing traders, we're looking for trending pairs. Sometimes we have to remain patient. This is even slower, and once again, I want everyone to kind of grasp this and fully understand. This is even slower than what it's been in some Julys and Augusts of years past when I went back and checked. So we'll continue to stay the course. We'll keep looking at a few pairs. I'm looking at I went down from a daily, weekly, and monthly down to a 4-hour chart, and I keep thinking that something's going to form. We're just waiting for something to just, like the ice in these rivers, we're waiting for the ice to melt, and when the ice melts, then all of a sudden there's going to be a 5 or 6 foot surge of water that's going to come up over the bank. And if you can draw that analogy to what's getting ready to happen here in the Forex markets, it's coming. Just be prepared for when the ice melts. Do your work now. Brian, I don't see any questions. We're doing an excellent job here of explaining everything. We're doing an excellent job of putting this material into the trade plan alerts. So people are following this. The emails that I have seen have all been positive. People are loving this. So let's just stay the course. We'll see what happens, and I'll turn it back over to you, my friend.
Thank you very much, Forex Joe. So, yeah, guys, let's just be patient and wait for what happens here with the news and not get overly concerned about any moves that are occurring up to that. It's all just repositioning and the market makers getting themselves ready to take advantage of whatever comes out of Ms. Yellen's mouth here later on. So, yeah, stay safe, and we'll catch you guys in the next class. Have a great one.